Alright, good morning. I'm usually not up quite this early. Usually I'm just looking at stuff on my phone if I wake up at the London Open. But I thought I'd start out with now that we have VIX online after 4 a.m., it looks like we have completely gapped above this wedge that has taken a decent amount of time to build. It's about 2 years long from February 18. There's a similar wedge that happened at the beginning of the January 2018 sell-off. This is right around the peak in Bitcoin, and this similar wedge actually triggered that big sell-off in February 2018. I know I talk about the similarities between the seasonal sell-off in early February, and we may have just actually gotten the true taste of that sell-off, and there might be more to come. We have not made new lows compared to back in this area for S&P 500, but this is the what is this? This is the year Camarilla R4 pivot, and this is the month R4. So there's a chance that we might have some retracement on this, but this is a huge level right here. And the fact that we bounced out of this wedge is not so great. The cases in South Korea and Japan and Italy rose over the weekend, and they pumped that news, especially leading into the 6 p.m. open for CME futures, 6 p.m. Eastern time. So I was looking at this SPY chart that I keep pushing around, and this is where the state of things are right now. I have a theory that we could do something like this. I have a couple of levels marked here. Let me hide some stuff. So in the trading group, we're really big on dark pools. We track dark pools. We track big block trades. In the Telegram application, there's the ability to use the bot that we have, and you can actually query for dark pool prints, and I'm going to go over the past 10 days for these guys. And this includes pre-market prices if they're available, which start at 4 a.m. Eastern time. So right now, between the last couple of days on SPY, we are over 3% below the dark pool levels that were printed. So this February 21 level is the same one that's marked here. February 21 and February 14. So these levels were being sold last week, and on Friday also was a huge day. And Thursday and Friday had remarkable volume in the dark pool area of the big institutions accumulating short positions. And this is the end result today of those shorts. So knowing that, I think that combined with the amount of combined with the total dark pool prints, and for the previous days too, because now we're beneath these dark pool levels from January 20th that triggered this top in this area. So this top was triggered by this dark pool selling for distribution back on January 20th. and we're well below those now. So I'm not showing the extended price, but it's down here somewhere. This is where the current extended price is. We bottomed very close to this February 3rd gap that I have marked. This is a big gap. This entire area right here was a very large gap that back when this was happening after the bottom of the first big virus scare, which was starting around here, right in this area on a Monday after we dropped overnight and DJI futures was slated to open something like 100 points down, but they bought it all back up right before the 6 p.m. open on Sunday, right here on on February 3rd, or February 2nd on Sunday. They bought it all the way back up. The PBOC said that they were injecting something like 400 billion, and then we got a series of big gap ups up to this area. I didn't feel right about this the entire time it was happening. It didn't feel right. It felt wrong. The fact that we didn't get down a little bit further and just immediately started gapping up in a series of 1% or more gap ups for 2 days in a row, it seemed wrong. So they were still distributing, and now we're beneath a huge amount of dark pool prints. So I'm under the impression that it is possible that we can do something like this, where we can generate a head and shoulders top. So this area right here, this potential area is where the 50-day moving average is. Right in this area is where the 50-day is. And you can see it on this chart. So actually, we're actually significantly below it now. So if the 50-day is not back tested and we don't rise back up to this area up here, and that potential head and shoulders top the top right here would be this 2.0 extension. Let me take a bunch of this stuff off. This is stuff from an old idea that I had. So if you remember from a while ago, I had an idea about how we could potentially be doing this big arc curve. That somewhere in this we do an initial surge, and then there's a middle section, and then there's a repeated pattern from the original pattern. You kind of trace it up this way. I thought the top was this right here. Back in February, I thought it was right here, and we did get a sell-off, but immediately went back up. So this big extension level right here, if we go back to a bigger chart, this is an important extension. This 3.0 extension that's right here is what we just hit. This guy right here from a monthly chart. Let me put on a weekly chart. So a weekly chart, this is the top of 2007 down to February 2009. That 3.0 extension was what we topped out at up here. Was 33.82. That was one of the reasons I had a big target near 3,400. We didn't quite get there. This is a huge level to hit. And there's a possibility. My original idea and my original thought was that we could retrace back down to this level, this big trend line that we broke out from. and that current value, maybe right around here somewhere, 3,100. This seems likely to me. If they really do want to make this into some kind of a head and shoulders top here and do something like this, this is possible. I could see something like this happening and then come down to this area and intersect this line would be the measured move target. This looks really bad. This is not good. This is not a bullish scenario. So just something to pay attention to with everything that's going on. We may have to have a retracement. The reason why I put this right shoulder right here was because of these other potential Fibonacci levels. This 1.618 level comes from, and this 2.0 level comes from here. So if I take this off, here's this 2 extension. And then here's this 1.618 extension. This is all coinciding right here with that January 20 dark pool level. QQQ was, you know, is beneath a huge amount of blocks now. So it's beneath all the way back to February 11th. Let's see if we can go even farther. So not until we get to about February 10th do we have dark pools that we're actually above. But this amount of dark pools for QQQ is pretty bad. VXX for the past 20 days, all the way to February 5th, all of the dark pool blocks, all the way back to February 5th for VXX, we're above all of them. And some by a huge amount. So the bottom one looks to be somewhere around February 20th, 13.47. That was on Thursday. So they were buying a huge amount of VXX on Thursday, Friday, along with shorting all the markets. And the extended price is 16.57. So we're going to have a nice gap up, but it seems to me as if they have been buying in a huge amount of VXX for weeks. Even all the way back to, let's see, January 27th. So we're above a good amount. I don't know if we are going to hold this level for the Monday gap, that Monday, February 3rd gap. If we don't hold it, that means that we have even more downside to go. And on SPY, it could get pretty ugly. So if we don't hold that 50-day moving average on S&P 500, then the next trigger might be the weekly ATR stop, which is around 3,200. So we could just keep falling, but you know, I tend to believe that very large candles like this, especially on a Monday, tend to get some kind of retracement. Um, Gap downs on a Monday are common, and big moves down after you get something like a 1 to 2% negative day on a Friday. About 4 out of 5 times there's a follow through on the following Monday and you make a brand new low. And in this case, a huge new low. So this might be the move that we were always expecting to happen somewhere around January and ending in, early February. But the banks interrupted this sell-off when it was supposed to happen back on February 3rd. So if I'm looking at 2018, this is kind of what I'm thinking that we're experiencing right now, but it's delayed. And this was also a big gap down on a Monday on February 5th, but this is where we are. So pay attention to this stuff. I have to stick to the dark pool levels. I have to watch these because they were telling the complete story on Friday and Thursday that the big institutions were selling as much as they could on Friday and Thursday, and they weren't shy about it because somewhere around 9:30 in the morning, a late 2 million plus 2.7 million QQQ dark pool print hit the tape that was actually a late sell print from earlier in the day. It was something that they did in the pre-market. And they were so eager to sell that they were selling even in the pre-market and trying to use the dark pool machines to hide it, even if it was only for an hour or two, but it was a huge sell. And then you also had massive XLK dark pool sell blocks on Thursday and Friday. So I'm going to pay attention to these blocks, and sometimes I post them on Twitter, sometimes I don't. They're mostly for subscribers into this channel, and they're kind of showing the way of where we're supposed to go. VXX, SPY, and QQQ especially are showing exactly where the stock market is headed. And right now it just says that we're going to continue to go down until maybe there's another central bank intervention. Maybe there's something on the virus news side that the cases are dwindling and that they have a control on it, or some new antiviral vaccine comes out or something. I don't know. But right now it seems like there is just no support. We're just blasting through support levels like they're nothing. Gold, last thing I'll talk about, is the gold 10-year seasonal profile says that we're supposed to have some kind of a relative top around today, that we ascend from somewhere in December, mid-December. And the reason for this is because this is the final FOMC statement for the year. And that's kind of where gold descends into, and then it's a buy opportunity into the new year all the way through this trend. So we've had really great correlation with the 10-year profile for gold. And just today, let me pull up this chart. We've got all these pivots on here. So this, I'm a really big fan of these Camarilla pivots, and right here is where the top is really close to the year Camarilla R4 pivot. So the fact that we got here just like this and broke out of this little triangle guy, this wedge that we have, this was a huge buying opportunity. And inside the chat group, we were definitely buying here at around 1580 and all the way up to 1600 on this breakout to capture this last little bit of this seasonal move. from this area all the way up to this final part where we usually have some kind of a top around the last week of February every year. This is the traditional top, and then gold sells off into the March FOMC, which is on March 18th this year. So this area right here, I believe, is going to be a significant resistance. I have an idea on this where I think that it's possible that we can actually sell off of this R4 pivot, this year R4, and maybe come back and backtest this 1600 level, which kind of intersects where this is. So this, I have this marked all the way to May because on the seasonal profile, that's right about where this bottom is right here. You kind of have a double bottom. And in May, this is where it is, May 22nd about, and this is the next buying opportunity to buy over the summer for gold. So that's kind of why I have this marked here, is because this, usually this trade setup is you hit this R4, back test this R3, and then come back up for one final test of this R4 level, which is back at 1680, and then who knows? Could keep going, could stop, could come back down. But that's usually the general trade, and I think it's a possibility that that's what could happen. This is, to me, indicative of a blow-off top in gold. The fact that we have this big gap up, we have this final gap up in the midst of, already a really strong trend. The volume today is slated to be heavy. We're already over 50% of the volume, of the normal volume for a single day in gold futures. So there's a chance that this could stall here and this could actually be a relative top. So I'm going with the seasonality, but I also need the dark pool prints. We have only been seeing buy prints for the last, I don't know how many days. So the last time we had some buy prints was on, or some dark pool buys was on February 19th, which was last Wednesday. But if we do go to all of the live prints, and we go back for the previous 10 days. So this will give me all the live, whoops. So back on February 18th was, let's see, February 18th, this was where we started buying because we started seeing these live blocks coming on the tape. And it was right when we were breaking out of this wedge on the 18th. So we started seeing this, and I started looking at the wedge, and that's when I said, this has to be that final move into the end of seasonality. And that's where I started accumulating a bunch of micro gold contracts because I wanted to be safe. I was already over leveraged on ES longs, so I didn't want to overexpose myself. But these ETF live blocks that are notable big blocks or the dark pool blocks are really special because they can give you an indication of where the market is actually traveling. Or where the institutions that control the vast majority of all of the volume intend for the market to go. So these are all reported live in the Daily Edge live channel, but you have the ability to pull these up on demand whenever you want and just kind of review. Okay. Good luck today. I think that covers pretty much everything I wanted to talk about. Sorry it took so long. Good luck trading.